Good evening and welcome to another episode of the Equity Market Outlook, where I'm sitting with Ankit Jain today. He's a senior fund manager at Mirae. He has long looked at both the large and mid-cap fund, but specifically the mid-cap fund. That's really been your area. So I want to get, into that. And Ankit, we've been doing this series just so that our investors can get a sense of how we are looking at things, how we've looked at the events of the past month as well. We keep saying that our equity outlook doesn't change every month, obviously, but it's a good way to communicate how we've looked at, some of the events. So if I look back at November, the thing that really stands out was, of course, that the market hit its all-time high after 14 long months, and we've all really felt it. But somehow it doesn't feel like that in our portfolios, right? I'll come to that portfolio bit in a while, but we did hit an all-time high. It was, I think, fueled in large part because of the GDP print that came out. Do you see this as the start of, a more significant move up?
Sure. No, thanks, Pavitra. So here, you're absolutely right. Some of these macro data points are seeing an improvement. GDP print of last quarter gone by at 8.2%. Has clearly surprised the market. Some part of it, I will say, is also to do with the low base. Because same quarter last year was at around 5.5%. But
it was still well above expectations.
No, absolutely. So with this first half GDP growth print by YoY is around 8%. Quarter one was 7.8. And as per RBI forecast is like 6.8 for the full year. So to that extent, second half ask rate is definitely low. And clearly B might be for full year well above 7% plus sort of a number. So what has caused this some bit of a positive surprise is that both the engine around government policy, one on the fiscal side, second on the monetary side, both are firing pretty well. If you look into the actions which has been undertaken throughout this year, starting from fiscal side, the sort of a stimulus which has been given right on the income tax side and followed it up by GST 2.0 and all, that has given some sort of a boost to the consumption part of the economy, which otherwise has been bit uneven because one part of the market was firing, another was not doing, and which we have seen in this recently gone by festive and all. We have seen good pickup across many of the discretionary categories as such, and which is also reflected in this GDP print where private consumption has seen some bit of a jump at 7.6%. So that is on the fiscal side of it. Second, on the monetary side, which has done quite a bit of a heavy lifting since throughout, let's say, last year. And which has added significantly in terms of overall liquidity into the system. And that is also bringing down overall cost of capital, improving liquidity side of it. That is adding now in terms of even credit growth, system credit growth, seeing bit of an inch up, which otherwise has actually slowed down to 10 to 11% sometime last year. So both of these engine put together is now, I think, humming fairly well. Just we need to see this current US tariff deal and all. This is one joker in the pack. But yeah, I mean, as far as things are, stand today, macro-wise looks fairly good. On to your point that while market's all-time high and within that there might be quite a disconnect between the portfolios. So this is where the clear change has been. If you look into last 16 months, I will say maybe large cap is up 4-5%, mid cap is also ballpark 3-4%, small cap is down 5-6%. So clearly 10% sort of underperformance has been there in the small cap. And this is rightly so. If you look into throughout last, let's say 13-14 months, there has been, first of all, starting point of valuations were very expensive in some of those pockets. And as earnings has sort of normalized, we have seen valuations also sort of normalizing. So both of these factors has sort of resulted in some of these consolidation in the market, which has panned out.
But the talk is still that, yes, the market is at a high, but I'm not feeling it. I still feel terrible about my portfolio, the mid and small, even mid caps. I mean, it's not as good as, enough for people to really be enthusiastic. Do you think that catch up is coming soon in line with the larger?
No, absolutely. If you look into, in fact, now our call is that it is no longer about large cap versus mid and small. Debate is not there. It is about, because mid and small cap is such a breed in, let's say, Indian market, and over time it has further strengthened significantly with the variety and choices of businesses being there. And last 16-17 month of consolidation in this space has made valuations far more reasonable.
Okay.
If you go back, let's say July 2024, mid-caps were trading at 1 year forward 34-35x P, and which were like almost 45-50% premium to their historical averages. And it is not like last 15-16 month earnings growth has not been there. The mid-caps earnings has still grown. Yes, expectations was way too high. So in that context, now those 45-50% valuations as sort of a premium has sort of a come down to 20 odd percent, in fact 15 to 20% to historical average, and which I clearly see as a far more reasonable sort of a number. And if earnings compounding from here on has to be good mid-teen CAGR, which is what everyone is building in, I will say those are far more realistic. And the quarter just gone by is some sort of a trailer behind that.
The management commentary is also pretty positive.
Yeah,
right?
absolutely. So just last quarter gone by, if you put things in context, PAT growth for Nifty 500 has been 15%. And even the top line growth, which has been the pain point last 4-5 quarter, last quarter saw a bit of a recovery from, let's say, 6-7% range to 8-9%. Yes, some festive and all might have had some part of it. But even, no, I think outlook has been
quite positive.
So to that extent, no, I clearly believe that earnings downgrade cycle, which of a brief period of earnings downgrade cycle might be coming to an end. And in that context, from here on, starting valuations are reasonable. So I think mid and small cap also should do equally well.
So clearly, Ankit, you are having a much easier time picking stocks now than a year ago. So tell me, what are you picking? Because we've spoken about, of course, consumption. There was also, like you said, the GST boost and income tax boost. Banks have been doing very well. A lot of the financials. What else stands out to you now?
Yeah, no, so you are absolutely right. Clearly, banking financial remains are, we are quite constructive about. Consumption also we are positive, but within that, one has to be very, very selective about, because certain pockets which has not been doing well clearly
doesn't deserve that price.
And some pockets where earnings growth visibility is good, where clearly valuations are factoring in quite a lot in terms of the ask rate. So, so while overall outlook is positive there, one has to be very, very selective. Third, pharmaceutical healthcare we are quite positive about. This is one sector even throughout last 1 year, in fact, very surprising, last 1 year sector has underperformed despite of not much downgrade in the earnings. Overall earnings has sort of still being maintained and has been fairly decent. Yes, it is also to do with some of these trade tariff and all, while pharma is out of
market just doesn't like uncertainty, right? You hear anything.
Absolutely. So to that extent, I think this is another sector, and within this CRO, CDMO, some of the contract manufacturers, we are quite constructive about.
No, healthcare has been a big, overweight for us across our portfolios. So now if you look at things from here on, of course, one big trigger we are looking at is the RBI policy. It could, help a portion of the market there as well. Anything else that you think we should watch in terms of a trigger? US is, God alone knows when that will happen.
No, you are absolutely right. Clearly now, this final 25 bips rate cut is the consensus expectation on December 5th. So that is one part of it. But second, even more importantly, is from the US. This trade deal, it has been a long wait. And India, in fact, at weighted average, 34% tariff is one of the highest. So clearly expectations are that at least that 25% penal tariff will get removed, and then let's see on balance portion. So that could be another trigger, and more importantly from FI flows standpoint, because if you look into YTD, it has been almost $20 billion sort of an outflow being there. So I think some of that can improve sentiment from the FI flow standpoint. However, from earnings standpoint, yes, some of these trade deal coming in and all will help in some of the impacted sector sort of outlook improving. But on its own, it is not that big of an impact on the overall from the
it just
market
removes that
earnings
overhang,
standpoint.
right? Of you don't know what's going to happen.
It is more positive from the sentiment sentiment standpoint.
Okay, one question I ask everyone who I do this with, because investors ask us, is where would you invest right now in terms of funds? Okay, so if I came and gave you 10 crores, I was like, Ankit, invest this. Don't put it all in your fund. We can put some in the mid-cap fund. Yeah. But what else would you choose?
No, so as I said, that outlook even for mid and small is equally good from versus the large cap. So I will say multi-cap and all do offer a pretty good asset allocation for an investor with right proportion of large cap and then mid and small. So large cap 40%, mid 30, small 30, something like that. So it is a very good asset allocation because it also gives you a stability around large cap sort of earnings at the same time. Right,
not letting you lose
alpha,
out on
alpha from mid and small cap bucket. So
okay, I think that is a fun for all seasons, and most people can do well to have a multi-cap in their portfolio. Absolutely. Thanks, Ankit, for helping us with this outlook, and we will speak again soon. I hope that helps our investors as well, just to understand where things are and how Ankit is looking at it right now.
Thank you. Thank you, Pavitra.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.